All right, let us continue with the top-down analysis for next week on gold and silver. So first of all, make sure you subscribe our channel to keep pushing forward. Okay, so that is trades on gold. We took it last week on Thursday. We took that trade. It was a long position trade. We took it from this 4 hour order block. See here, price dropped into that 4 hour demand, and then after mitigation, see 4 hour reaction, 4 hour candle closed bullish with the manipulation. It created a very good candle range model. Okay, after creation of that candle range model, we wait retracement to discount level of that 4 hour range. We use this manipulation candle to find range. You see price retraced to optimal entry area, and then execute a long position. Taking profit number one, it's a half of the target here, a half of what target, and then final TP is around these areas. The high, it is 47.04. It's not yet. Okay, so that is it. That is trade we took last week on Thursday on Goldie. It executed with analysis on community. Let me show you here. You analyze it from higher time frame, from daily time frame, there was order block, and then from 1 hour time frame, there is extreme demand area. Also on 4 hour, there is order block. So we execute these trades like this. We see that it was very clear execution on Goldie. First entry, it was directly, let me show you this first entry, it was directly from 1 hour order block, and then this second entry is directly on 4 hour candle range theory on 4 hour CRT. We took this second entry on gold. So that is it. It was very, very clear entry that we took last week on gold. It was Thursday. Okay, so that is it. TP2, not yet. So let us reanalyze it for next week so as we can get a clear picture on what is next on gold. So let us start with the daily time frame. Let's start with the daily time frame. Daily time frame, and daily time frame or weekly time frame to get weekly bias and all of that. Okay. From weekly time frame, as we analyzed on last video, price reacted on that weekly extreme demands. After reaction, this weekly candle closed inside this previous candle range. So it created a good CRT model. So this week, last week, it was a distribution week, and this distribution is not reached destination point. Destination point, it is 50.51. This area CRT high. So next week, expect the price will continue with the distribution until you take out this CRT high or candle range high. It is around 50.51. Okay. So that is weekly bias. Weekly bias is bullish. Also last week candle was the bullish. So we are 100% sure the bias is bullish for next week. Shifting your time frame to daily time frame. On daily time frame, see there is market structure like this. You see price reacted on this daily price reacted on this daily order block. After reaction, see it closed within previous candle range. It closed within previous candle range. So that is very good reaction. It created a manipulation or rejection. It reacted from this order block, and also it closed within previous candle range. So that is a very good reaction for reversal. That is very good reaction for reversal. So our duty next week is to find buys. Our duty next week is to find buys until price take out this area, 50.51. Okay. So what we do, mark this last candle range. It will help us to find a clear zone to find buys. Then after, shift your time frame to lower time frame, can shift it to 4-hour to correct some info. 4-hour time frame, we have this engulfing candle, which means it is bullish market structure. Okay, all right. Also, here we have this 4-hour order block, which is not yet mitigated around this area. Let me remove this previous one. So as you can see it very well. Okay. So we have that 4-hour order block around that area, which is not yet mitigated. Shift your time frame to 1-hour time frame. 1-hour time frame, there is nothing on discount level. 30 minutes, 30 minutes, 30 minutes also there is order block here. On 30 minutes, we have that order block around that area. Okay. So this order block, it will be extreme zone to find what? It will be extreme zone to find buys from. Okay, that is our daily range. When we apply Fibonacci trace that area, no, let us return back to the time frame to mark out that correctly. That is our daily range. So use Fibonacci to divide the premium and discount. So when you divide premium and discount, recognize that on this 30-minute area, this 30-minute order block, it is deep discount level. So price may retrace back to this 30-minute order block, and then we'll find buys to that area. So this 30-minute OB is very, very, very low risky area to click a buy. Very low risky to take a long position from, and then we target 50.51 area. Okay, that is very, very clear and accurate zone to find buys from. That 30-minute order block, that is first option. That is first option. Second option on this Goldie, second option on Goldie, you are supposed to wait if market will open the gap. It means there is low probability of price to return back to this order block. If open, it will open the gap upwards, waiting mitigation of gap, and then execute a long position. So if it open with a gap, it will be a clear order block here, and then wait mitigation of that order block. Getting for long position target, always TP 170. It is 47.99, TP1, TP2, 50.51. Okay. So if it will open with a gap, wait mitigation of that 30 minutes will be here. Wait confirmation, execute a long position, TP1 around 47.99, TP2 is 50.51, TP2 expecting next week. Gold will be bullish. Gold will be bullish. So this, two options or 2 point of interest where you can find buys from, Also here, we have some points where price may react. We have that order breaker block. When price approach this area, it may react. Short retracement or shallow retracement, and then it will continue to push up. So on 30 minutes, we have this breaker block. You have to watch it out. Have that breaker block where price may react from, and then it may create a pullback, and then we'll continue the bullish movement to upwards. Okay, so that is it. That is it for next week on gold. For any issue, that may happen, uncertainty issue, for any uncertainty issue, if price may drop aggressively, wait that liquidity sweep and then can find buys again. The buys from weekly time frame is bullish. So there is any way you can find short position on this market. You find buys only. If you take a short position, it will be a scalp or counter trend. But for this week, you'll find buys only because weekly bias is bullish as we saw on weekly time frame. So that is it on what? That is it on gold. So we can see silver. Silver have market structure like this. Very, very wonderful market structure, but it will be very easy and simple market structure. You can start here. You can see it swept to this previous low, take out this sell side liquidity. After it take up that sell side liquidity, see there is a shifty on lower time frame. We take out this previous high. We'll drop it later. We see it very well. Okay, on daily time frame, see last candle. It is Thursday candle closed bearish, but it mitigates what this daily imbalance, that daily favorable gap. So shift your time frame to 4 hour. On 4 time frame, we have this market structure. As we saw, it take out the said liquidity, and then it created a market shifty here. So here you have very clear market shifty. After that shifty, it created a pullback to this imbalance here. You see, it created a pullback to that imbalance. That is pullback to that imbalance. So expect price may push up aggressively next week. Price may push up aggressively next week. So where we are supposed to find buys from? Here on 4 hour time frame, we have order block. On 4 hour time frame, here we have this order block, which is an unmitigated order block. Also around this area, we have this supply, unmitigated supply. So this supply may lead to reaction of price, because you can see here it shaped this double top, which also is liquidity. And after that, see some kind of market shifting, creation of that order block. So if price may first react from this supply, it may drop to this demand, and then you can pick a buy, and then you can continue with a bullish move. Or if price will start this demand, mitigation of that demand, we pick a buy directly, and then TP number one, it will be around this order block or supply, because price may react short retracement, and then you can continue with a bullish move on gold. Target, where is target on where we'll place our taking profit on silver. Here we have that liquidity. Also here we have this resistance. We have that resistance. So that is TP1, TP2 around that area, 89. 89, it will be a final for next week. For next week, remember price is not moving in straight line. Price do not move in straight line. So I get some retracement, impulsive retracement, something like that. Okay. So that is my bias for next week on gold or on silver. I have two zones, I have two reaction zones. this demand. The bias is bullish, so you have to find the bias. If price will drop to this area, find confirmation and then take a buy. Okay. Also, you have this obstacle here for our supply where price will react, cause short retracement and then bullish. For 100% buy with breakout of this area, retest and then find another entry for buy. So we have multiple option on silver like that. Have multiple option on silver like that. Let's see US 100. US 100. US 100, we have market structure like this. Let's see on the time frame. Very simple. On daily time frame, we have this unmitigated daily demand with endorsement. So expecting when price will drop next week, it may react direct on this for her demand, and then we'll pick your buy until we take out this liquidity area. Till it take out that liquidity area. So that is zone by zone on US what? 100, US 30. On US 30 also we have this market structure. On daily time frame we have this favorable gap. See, price mitigates this favorable gap. Also, Thursday candle closed with the rejection. That means price reacted from that imbalance of a gap. So our duty is to find buys within this Thursday candle range, and target will be around where? Around this high buy side liquidity. Okay, so find buys within that range. Drop to lower time frame. On lower time frame, for our time frame, we recognize on the discount area there is that demand zone and mitigated demand zone. So US 30, we're supposed to wait confirmation around this area. Pick a buy, TP1 down around this area, have a lot of liquidity here. Place it there, and then final TP will hold it until price take out this extra range liquidity. So that is my view on US 30 for next week. So make sure you fund your account, join a premium, and then we are printing money. If you don't have any time to trade, you send your login, tuma login zako hapo. Account management is available. So initial balance 500 zinatosha, 500 it is okay, but 1K is very, very okay. 1K account is very, very okay, but 500 it is okay. It is manageable. It is manageable. Okay. So kwa mfano silver ina volatility kubwa. Kwa hiyo kama una akaunti ndogo hautakiwi kutrade silver. Also gold siku hizi pip value zinakuwa kama zinaongezeka na kupungua. When Trump speaks, pip value zinaongezeka. Ukiwa na movement ya kawaida, pip value zinapungua. Okay. So also on gold, you're supposed to have a lot of money in order to manage trades on gold. So make sure you have enough capital, a lot of money to invest. Hawezi kutrade gold with a 50, and unless you find a sniper on lower time frame with a zero drawdown, you'll be able to trade it. But unless you have enough capital to hold everything, to hold the move with a good lot size, with a good lot size. So we have to be serious. We have to be serious. We have to invest a lot of money on trading. You have to invest a lot of money. You can't trade with 100 or 50. I always buy at a GLE kwa $50. Hiyo ni ya kula cabbage. So let us be serious on trading as normal business. So trading $20 kabisa, unajiita trader. Unajiita trader, una trade na $20. So we have to be serious on investment. Deposit angalau 500, 1,000, 2,000. So as you can be able to manage risk. So you can't manage risk on 50, 100. Ili kuingia from margin to hata weke stop loss. $100, you can't manage risk on $100. You can't manage risk on 100. So ukimanage risk on 100, it means hata profit tenda kupata 20, 10, which is I make sense. So you have to invest. You have to invest. If you don't have enough capital, buy prop firm. You have to buy prop firm. I will help you to pass account with a $30 fee only. And then ukipata real account, you continue with it. Itakuwa ni capital ya kutosha, but trading on small account is illegal. So see you on Monday. We'll be together on community.